All right, guys, I'm going to be very brief here. I got a couple of pre-determined notes here so I can cover this as fast as I possibly can. So for the sake of this video, we're going to talk about the opening range breakout trade. And today there was two opportunities that were presented, and we're going to talk about both opportunities. It's a snippet of the trade plan that I post every day for my group on Discord. This is a premium group. Obviously, they'll receive uh, guidance from me every single day, and this is part of the trade plan that I post. Please don't mind a lot of the drawings that I have here, which I am going to hide for the purpose of this video, and then I'm going to bring them back. So let's just hide all the drawings. So here, what we need to focus on is the opening range breakout trade. And as you can see here, I have a label for RTH open and a label for the London opening price. So those are two very important prices for me because that's the way that I look at the market. So let's just change the color for the RTH price, and let's just make it a different color. For our benefit here, we're gonna make it green, so we can create some distinction from the London opening price. Actually, I just changed the London price to green. So, anyways, right now it's a live market, so it's running. The two things that we need to focus on is the break, the first 30 minutes of trading, which happened here at 9:30. So we're gonna put a line here, vertical line, so you can see the 9:30 candle, which is this candle here. Can't put a line because it brings all the other drawings in place. So let me hide the drawings again. Just follow this blue line here, where the market just bounced during the ETH session here to the tick. So from 290 to 310 is 40 points. So if you're counting, that's 40 times 2, let's say $800 from a level that, if you're part of my group, you'll know that is very important. But anyways, we go back to here. So the first 30 minutes is not accounted for the opening range breakout because we need to allow the range to be set. Okay, so once the range is set, we look for two opportunities. We look for the break of the level to the downside and the break to the level to the upside. So those are the two things that we're trying to spot in this particular video here. So I'm going to bring all the drawings, and I apologize for the redundancy of some lines. But anyways, so here the first opportunity shows up here. It breaks to the downside. If you're part of my group, you'll know that the first target is 210. So 210 is right around here where this yellow line is. So let me just change this to 210. So technically speaking, you to 210, that is a 52-point trade. Very little drawdown, if any, but you got yourself 52 points. Now, if you were trading live with me or for whatever the case may be, you will know that part of my uh, naked POC strategy covers volume profile, and this is the volume profile from Friday. POC is right here at 155. That is exactly what the NQ came down to, 155. So if you were trading this live, you would probably look for opportunities to write this all the way down to the 155, 17155 level. But let's pretend that that didn't happen. You didn't do that. That's okay. This is a double distribution profile, and that's why the level of 17,210 was highlighted in my plan. Anyways, let's go back to the opening range breakout. Let's hide the levels again. So you understand the first trade, it broke below it. You win with the break, you got yourself 50 points. Let's hide the drawings here. Uh, Nothing happened. Let's just take a look to the upside now. So now the break happens to the upside here. And you can clearly see how a candle here breaks the opening range high right here. This candle at 1:26 p.m. The next one open, it dips a little bit and it goes from there. So let's bring our drawings back. So now you can see that from here, let's just let's just say that you put your stop loss 50 points, which you don't necessarily need 50 points for that. Uh, I just put it in there, but I will probably use. Normally, my stop loss is 20 points. So if it goes against me by 20 points, my setup is wrong. So you can see it down here. It was never compromised. And when you look in here, it was never compromised. I have the trade going all the way to 425 because my plan specifically calls for 425 as target number one. So we're following the plan. We're following the breakout and the breakdown of the opening range, which is right over here. So to the downside, we collected 50 points. To the upside, we collected 89 points. This is called 90 points a round up. So that basically gave you 141 points. So I rounded up to 150, but let's just call it 140. So that is $2,800 with one contract of the NQ with two trades in which you were risking no more than 20 points per trade. 20 points, then 20, it's $400 on this one and $400 on this one. So that was the risk on the trade. You risk $800 total. Now your position was never compromised. Both positions hit targets as per plan. And today is Monday, and you got yourself $2,800. If you're not happy with $2,800, I don't know what to tell you. But anyways, I'm going to share this chart in the course, and I'm going to share this video so you can see a practical example of the application of the opening range breakout. Thank you so much. Have a great week.